Hey guys, it's Ivan Valenzuela, your friend in the real estate business, and today we're talking about some super basic requirements for attaining a home loan. That way you can know if you're a good candidate to go ahead and apply for a loan. So first we're going to start off with credit score. You're going to ideally want to have over a 620 credit score. Typically the higher credit score you have, the lower the interest rate and the better the monthly payment. Now, could you qualify for a loan with below a 620 credit score? Absolutely, but you're probably going to have a really high interest rate and it might not make sense. Next thing from there is the down payment. You're going to want to have between 3.5% and 5% down depending on the loan program that you qualify for. Conventional programs can go as low as 3.5% to 5%. FHA can even go as low as a 3% down payment, so it just depends on the credit, income, and all of that. Next thing we're going to look at is 2 years of employment within the same industry. That does not mean that you have to be at the same job, but just within the same industry. So you could have changed jobs within those 2 years, but as long as, like I said, you're still doing the same thing. All right. So next thing is the closing costs. Closing costs are typically about 2.5% of the total purchase price of the house. You should keep that in the bank account, have that handy, but there are a couple other tactics to go about that, right? You could finance your closing costs, put it into the loan, in which case the lender will have to increase your interest rate to go ahead and cover those closing costs. The other option is to have the seller reimburse you some money to help you pay for those closing costs. Now that's not very common in any market, but it does happen here or there, right? Just given the right opportunity, the right motivation of the seller, and a little to no competition. So that about does it for the recs. Things to note, not every mortgage lender works the same. Everyone's got different experience, different strategies, and they work for different companies. Some people are their own brokers. They can sell your loan to any bank in the country, therefore they can offer you any program. Some people are just direct lenders. They just lend from their bank directly, and they have their own policy and procedures. So always know who you're working with. Next thing is there is not one standard interest rate for all. So whatever rates you see that are going on the market, that doesn't mean that's going to be your rate. So there's a few different factors that go into what interest rate you get, such as credit score, income, debt to income ratio, right? How much minimum monthly debts you have versus your monthly income. And last but not least, who you work with makes all the difference. You're spending a lot of money when you're buying a home. Should be one of your most expensive purchases of your lifetime. I wouldn't do it with an amateur or part-timer. Definitely do it with a professional that is fully engulfed in real estate. That about does it for my spiel. Again, I'm Ivan Valenzuela, your friend in the real estate business. For any questions, inquiries, please call me, DM me, text me, whatever you gotta do. I'm an open book. Thanks for tuning in. I'll catch you guys on the next one. Peace.